Thank you for staying with us on today's Tech Show. Now we're on the Tech Talk segment. Now, Nigeria's digital tax laws are reshaping how businesses operate online, on how businesses operating online are taxed. With the rise of digital platforms, fintechs, e-commerce, and streaming services, the government has introduced new rules to ensure these businesses contribute fairly to national revenue. The Federal Inland Revenue Service now requires both local and foreign digital companies to pay taxes on services provided to Nigerians. This move, which includes provisions under the Finance Act and VAT laws, aims to capture revenue from the growing digital economy. However, many people and business owners still do not fully understand what these laws mean, who they affect, and how to comply. To help explain this, I'm joined by Reginald Nnwoka, Esquire. He's a lecturer, Faculty of Law, Rivers State University, and Managing Solicitor, R.W. Nnwoka and Co. Thank you for joining me on the show, sir.
Thank you for having me. It's a pleasure to be here.
Yeah. Now, let's go straight to the point. Now, what exactly are Nigeria's digital tax laws and why were they introduced?
Nigeria's digital tax laws refer to those laws that were enacted to tax the digital economy. Now, when we talk about the digital economy, we refer to those entities, those businesses that are internet and technology driven. They are largely based online. So in other words, digital transactions are limitless. They are not constrained by boundaries. So players in the digital economy can be in one country and offer services and goods in another country. So those are the digital players. They include our streaming services, online marketing. Some of the popular ones we have are our Facebook is one of the top one digital, companies in the world. So those are the kind of entities we refer to as players or operators in the digital economy. They are quite distinct from the regular brick and mortar offices we have today, or businesses that actually have physical presence in a physical building or facilities where they operate from. Their structure is largely driven by two things: the internet and technology. So they almost operate on the internet. You may not find a physical office, a physical shop, but they are there operating their businesses online. So those are who we refer to as the players in the digital economy. Now, traditionally, taxation is based on presence and residency. So if a person is resident in a particular country, the country has the jurisdiction, the power to impose taxes on such businesses. So for instance, in Nigeria, every company registered in Nigeria is subject to Nigeria's tax laws. Now, when you have companies like Facebook, Google, Meta, and the rest of them who are registered in foreign countries but conduct operations here, they carry out their services here, provide services to Nigerians, it becomes a challenge. How does the Nigerian government tax them? We all stream from streaming site, Netflix, Amazon Prime, and the rest, YouTube. Now, those companies, they derive money from Nigeria. They make money from Nigeria. Nigerians subscribe to these services. Now, when they subscribe, how does the Nigerian government get revenue from them? Because they do not have physical presence in Nigeria. So the government has a challenge. And it's a global thing. It's not just applicable to Nigeria. Nigerian fintechs, for instance, companies who operate in the finance industry that are based on technology, they also operate in other countries. How do those countries also derive tax from such entities that are largely digital? Now, in order to overcome that challenge, Nigeria had to enact specific laws that would impose taxes on these digital companies. So that was the step Nigeria took in order to bring such companies into the tax net. Nigeria enacted laws to enable them tax these digital companies.
Okay, now, when is it officially kicking off in terms of the digital taxing the digital services and online transactions? When is it officially starting in Nigeria? Has it already started, or is it starting sometime next year? When is it starting up?
Now, we are undergoing a massive transformation in our tax system. Now, initially, the tax laws were amended. So we had a law called the Finance Act of 2019. That was the first step Nigeria took towards widening the tax net to bring in digital operators, those who operate in the digital economy. And that act, the Finance Act, amended the Companies Income Tax Act, which is the principal law governing taxation of companies. Now, what it did was to include those who carry out digital activities as taxable persons. So their transactions, their streaming, and all other services they provide online now became subject to taxes. Now, that was further amended by the Finance Act 2020 and 2021. So these have been in place. Now, but what Nigeria has now done is we have now enacted a new tax legislation. So much of the Finance Act has now been repealed by what we now call the Nigerian Tax Act. So a lot of those provisions which were contained in the Finance Act were repealed and now reenacted in the new Tax Act 2025, which comes into effect from January 2026. So Nigeria already has the laws in place, but what we have done is enhance them, improved on it to ensure that as many persons as possible are caught. I mean, as many businesses are captured within the tax bracket for those who are to pay tax. So that's what has happened now. So yes, we do have laws in Nigeria presently which tax the digital economy, but we also have a broader law that comes into operation in 2026 of January. So that's where we are with our tax laws now.
Okay, now for those listening to us, we are live on Facebook at Today 95.1 FM. Today 95.1 FM. We're live on Facebook. You could drop your comments or your questions. I'll surely put it across to my guest, and maybe he can help you find answers. Yes, it doesn't work for the FIRS, but he can help you find answers to your question. Now, who is required to pay digital taxes? Is it only the foreign companies, or do local startups fall under this too? Because a lot of people do not understand who and who is required, because so many people do not know, so that they will not be caught unaware by January when we hear that this is going to start. So who and who is required to pay digital taxes?
Now, under the incoming tax framework we have under the Nigerian Tax Act, now companies in Nigeria, registered and resident companies, are all required to pay taxes. Now, also, non-resident companies, these are companies such as Facebook, Google, and Meta, and the rest of them, are also required to now pay taxes in Nigeria from 2026. So it applies to both startups, small companies registered in Nigeria, bigger companies, and the foreign companies as well. They are all required to pay taxes come 2026. Now, it's important to clarify, like, coming into from 2026, there is no specific tax called a digital tax. So what the Act has done is, what was classified as some form of digital tax under the new Act, such companies that are digital companies are now required to pay companies' income tax as one of the major taxes they are to pay. It applies to both companies that are residents, that is registered in Nigeria and doing business in Nigeria with some form of physical presence, and foreign companies as well that are based abroad, but their services are being enjoyed or used by persons within Nigeria. Yes.
Okay, now, what about businesses that maybe are not registered? You know, we have businesses in Nigeria that maybe are based online and they are not officially registered with the Corporate Affairs Commission. Does this also affect them?
Now, for businesses that are not registered, they ought to be registered.
Yeah.
Because there's a requirement. If you're conducting a business, you either conduct it in your personal capacity or you register your business. You can either register it as a business name, which is essentially you still doing business under a particular name, or as a company. Now, whichever way you choose to operate, if you choose to operate in your personal capacity through a business name, you would then be liable to what we call the personal income tax. So it means you and the business are one and the same. So in that sense, whatever transactions you engage in online, if you sell merchandise online, whatever income you derive into your personal account, you will still be liable to pay tax. The tax is levied on you personally. In that sort of situations, is what we used to have what we have as the personal income tax, which by virtue of the new act that is coming, it has merged all. In fact, if the vast majority of the taxes we have, so your personal income tax, your company's income tax, they have all been merged under the Nigerian Tax Act. You know, in the past, for you to get our tax legislation, you need to open about 10 different tax laws covering different areas: petroleum, personal income, company's income, VAT, capital gains tax. But now under the Nigerian Tax Act, they can all be found in one document. Okay, so it's now easy. Now that personal income tax is what you would pay if you operate in a digital economy personally and you don't have a registered business. Okay, now in addition to that, if you operate with a company, you will now be susceptible to pay the company's income tax. Yes. And there's still a number of other taxes, which for instance, there's also the value-added tax, okay, which you'll be required to pay. There's also what we call the capital gains tax and the stamp duties tax. These are all taxes which players in the digital economy are required to pay. So whichever way you choose to operate, one way or the other, you will still have to pay the taxman his taxes.
Now, I'm curious because how do you think the Federal Inland Revenue Service will be able to enforce this tax? You understand? Because there are people, particularly Nigerians, who run businesses online, are not registered, but run it with their personal account.
Yes.
So you don't even know it's their business. Because I'm curious, how are they going to enforce tax collection from such people?
Now, one of the steps the FIR is taking is they do a lot of monitoring. Now, they're empowered to monitor. Now, if you transact online and you fail to as an individual, let's just use a person who operates through their individual account, not under a company, you're still required to make tax returns. As an adult who works, you're required to make tax returns. Now, if you fail to make that tax returns, you give room for the taxman to come and investigate. They inspect your records, they inspect your books. Even as an individual, if you under-declare, for instance, if you're self-employed, you run your business, you're meant to declare your income annually. Now, in that income, you will identify what sort of transactions you engaged in, how much was profit, what was the expenditures you made. Now, those transactions will be investigated. Now, the tax man is also employing online monitoring, where you post those orders you make. Oh, I just sold this bag for 500,000. You know, my customers are great. My customers are doing well. All that social media will be monitored. Now, also, they also have the power under the Act now to get your bank records. With those records, they can view the transactions in your account. And if you're unable to explain certain transactions, it becomes an issue. It means you have either defaulted or under-declared your income. So those are all measures. And also, of course, they're also empowered to come to your premises, if you operate a business with physical presence, to come and carry out investigations. They can come, of course, with notice to you and say they want to see your records. And you're obliged to bring those records to them to review. So those are all steps they can take. And of course, if they find out that you're actually defaulted they can actually serve you a tax demand or even prosecute you. Yeah, so those are all steps they can take. And now they are adopting a lot of technology, towards towards assessing the tax of the public. Those are all steps the FRS is taking, and even the state's internal revenue service.
Now, what does the term significant economic presence mean? And how does it affect not foreign tech companies and also companies in Nigeria?
I'll start with companies in Nigeria.
Okay.
Now, for companies in Nigeria, significant economic presence does not apply because by default, by being registered as a Nigerian company, you're already subject to the jurisdiction or the taxing powers and control of the Nigerian tax authorities. So it's a bit easier for the Nigerian company. Now, because of the difficulty in having access to some of the documents and records of companies who operate in Nigeria, foreign companies, that is non-resident companies, but who provide services here. Facebook is registered, I believe, in America, in the US.
Yeah.
Now, it is not easy for Nigeria to have access to their records, except they willingly choose to provide those records. It's difficult to have access. So how do you determine how much revenue Facebook is making from Nigeria? How do you determine how much revenue Netflix is making from Nigeria? It's a bit of a challenge, right? Now, what the government has now done, and a number of other countries, is come up with this doctrine of significant economic presence, which is to the effect that if you're deriving income from a particular country, it then means that you have presence in that country, and therefore that income which you have derived from the country is now liable to be taxed. So in other words, for each stream, each subscription I make on Netflix, the Nigerian government is saying Netflix has significant economic presence. For each advert I pay for on Meta, Facebook, or Instagram, the Nigerian government is saying, look, Instagram and Facebook, you have significant economic presence in Nigeria, and therefore you should pay tax to the Nigerian government. So you discover there was a time Twitter was blacklisted, and that was part of the issues was that, look, Twitter is going to be losing money because the revenue they would have derived from the Nigerian market, they are no longer getting it. So a lot of these companies now decided, look, they would cooperate with the Nigerian government in order for them to operate freely so that they don't lose revenue. And they provide their audited statements and accounts to say, okay, we've made so amount of income from Nigeria. Therefore, we, based on your tax rates, will pay this particular amount of tax. So that is what the purpose of that significant economic presence is, to determine foreign non-resident companies that operate, provide services, supply goods within Nigeria to make them taxable. So that's the logic or the principle behind the significant economic presence.
You know, this conversation is quite broad, and we can only do the best we can with the few minutes we have left. Because of time, I would skip some questions I would have asked you for next time. Now,
okay.
Looking at Nigerian tax or Nigerian tax policies, comparing them to what happens in other countries,
yes,
do you think we are overtaxing companies and individuals in Nigeria?
Well, nobody likes to pay taxes. That's the honest truth. Each time issues of taxation come up, people are reluctant to pay taxes because we are constantly thinking, why should I be giving the government my money? But globally, I believe Nigerian, when you compare the taxes we pay here to what is obtainable in other countries, our taxes are much lesser, both in the rates and in the number of taxes. In England, they pay taxes for water rates. We hardly do that here.
We don't do that.
We don't do that.
We don't do that here.
You know, they pay what is called council tax. They pay quite TV license. To have a TV, you have to pay a tax. Now, but in Nigeria, our tax laws are designed with the new tax act, are designed in such a way that a lot of small businesses their tax burden has been reduced. So in the Tax Act, which comes into effect in January, now small companies, these are companies with a turnover of 50 million and below, would pay 0% companies income tax. They are also exempt from paying a 4% development level, which ordinarily all companies are to pay. Okay, although they are still going to pay 7.5 VAT. But that's a huge relief. How many businesses have a turnover of 50 million? Small business, not a lot.
Yeah, very few.
Very few.
Actually.
So that's a huge relief. So I do not think our tax laws are such that would discourage any investment or in comparison to the tax laws we have in other countries. I think they are quite fair. They're quite fair.
Because of time, I have two questions to ask. If we can manage to get them across in the next 2-3 minutes, I'll be fine. The first question is, what steps can business owners take to ensure they are compliant with these laws? Because a lot of business owners seem not to know anything about tax. Because I've gone to the market to ask them, are you aware of this tax that's coming up in January? So we not hear anything. No, nothing concern me, and that's where they concern me. I don't pay my market levy. They don't know that there's a difference between market levy and tax. What steps do you think they need to take, or is there anything you think the government can do to sensitize them?
I think what the government needs to do is the focus needs to shift from the literates in our society to going down to the markets, like you said, the streets, enlightening people. There's a lot of enlightenment online. I follow the leader of the tax reform, Taiwo Yedele. He's constantly posting, information. But do those people, the small businesses, the market women, the traders, they have no knowledge of this. They are not aware of it. So the enlightenment the focus needs to shift from online-based to physical-based. FRS needs to go on the street, campaigning, go to the markets, enlightening people, because a lot of people are not aware. That needs to be done, and it needs to be done more seriously. I haven't seen anything from FRS physically in Port Harcourt, or even the River State Internal Revenue. I haven't seen anything. You have webinars going on. Do they attend webinars? It is only some of the enlightened ones that even can afford data and the rest and have digital phones that can actually participate in those things. But a lot of the actual common man, the man on the street, the bus drivers, the keke riders, the average man, they're not aware of it. So more effort particularly needs to be done, put into the same way when the elections come. INEC goes around enlightening political parties. That's the same approach that should be adopted.
My final question to you.
Sir.
Just before I ask that question, I have been trying to get hold of the FIRS on my show to come and talk about this, and I have not succeeded in the last 2 months. I'm still appealing that they need to also come to explain better so people will get to understand. Looking ahead, what changes or improvement would you like to see in Nigeria's digital taxation policy?
Well, one of the changes I would like to see in Nigeria's digital taxation policy is for more transparency, in the sense that the way the laws are, not a lot of people understand them. It needs to be simplified into ABC. A lot of times, you have to get a tax expert for you to be able to decipher some of these laws, because they are very complex. Some of the terminologies there, you require technical expertise to understand it. You have various sections, subsections, exceptions. So it's a very complex. So I would like to see a more transparent, more easier to understand laws in such a way that anybody who picks it up, even without having a tax professional, you can easily understand it. I think that in the UK, there's a system where if you go to the government portal, it can even help you compute your taxes. You just key in the figures, key in your invoices, key in your receipts, and it computes it and tells you what taxes you're to pay. So that will help a lot, that sort of framework. I know FRS had something, but it wasn't very accurate from what I saw, very detailed. But if they do that, it would help a lot. And it will aid compliance, because people can only comply with tax laws when that they understand. And not every small business or small company can afford to hire a tax expert. Some of them are barely getting by. So that's what I believe should be done.
Reginald Nnwoka, Esquire, lecturer, Faculty of Law, Rivers State University, managing solicitor, R.W. Walker and Co. Thank you for joining me on this segment of the show.
Thank you very much for having me. It's been a pleasure.
Yeah.
Thank you.
So that's the show for this week. We'll be back again next week, Monday. Talk That Talk will be coming up after the news at 2.